Hi everyone, welcome to the Majlis. I'm your host Yasmin Khoitler, and with me today I have Talal Attieh. Welcome to the podcast.
Hi, Yasmin. Thank you for having me.
Talal, I'm very excited to have on as a young Saudi who is a co-founder and a partner at Steel Atlas, which is a venture capital firm that invests in early stage industrials. And what's really exciting is that they then help their portfolio companies with connections in the GCC, particularly in Saudi Arabia, with industrial conglomerates and with major clients here. So, Talal, would love to know how did Steel Atlas begin?
I wish I could give you a very beautiful story that started very clearly and was a step-by-step process we planned from the beginning. But I think, as with most things in life, was not planned. Looking at it from a backwards-looking lens, we started with meeting my partner Cameron Porter, who was an ex-MLS player turned venture investor, computer science background, building companies from the ground up in venture in the U.S. Him and I met around the time that I was leaving my old firm, an independent investment advisory firm in Los Angeles. At that time, we had been investing in quite a few venture-backed businesses that were focused on industrials. The clients of that firm were from a variety of sectors: construction, shipping, petrochemicals. My family is also in the steel business, and so that was a natural fit for some of the companies we were looking at and to assess. We'd noticed that there was a trend in which some of these companies wanted to expand into the GCC, specifically Saudi. I think at the time we were just seeing a shift and uptick in investment from
what year was this?
the government. I think this was around 2022. We were seeing a really big shift and uptick in terms of the government's involvement locally in Saudi when it comes to technology investments, but specifically localizing a lot of the manufacturing, production of industrial assets beyond the existing raw material extraction and export, but actual finished goods, which is something that I felt very strongly about. Obviously, NEOM started to develop a lot more, other giga projects around the country, and it became very clear to us that if we wanted to capitalize on being at the nexus of these two areas, the U.S. With its prowess in early stage technology, and Saudi and its ability to, with quick will and determination, build large projects. So we developed a thesis around investing in what we call resilience enabling technologies. That is where we identify areas of industrial volatility. A lot of this was very Nassim Taleb anti-fragile inspiration, but it was how do we identify and mitigate volatilities that are larger and growing, and invest in businesses that are best suited to either thrive in those situations or support those underlying economies or businesses in those times. And we think that we saw a trend where, due to two main factors: increased global interconnectivity for the past many years through globalization. Supply chains were sent offshore. The U.S. is guilty of this. I think Saudi is now seeing the benefits of localizing a lot of these supply chains. At the same time, the declining interest rates for the past 40 years led businesses to really feel like cost of capital is cheap. We can just pursue markets where labor is a lot cheaper and just go about it that way. Problem is, when you have a volatility shock, like for example COVID or the Suez Canal being blocked, or what have you, or Russia and Ukraine, you suddenly see the effects of being highly interconnected and reliant on foreign governments or foreign businesses to support your needs locally. And so we realized that now the pendulum is swinging back. Both the U.S. with the CHIPS Act or the IRA are looking at ways to localize and make sure they onshore a lot of the critical supply chains, both in tech and beyond. I see the same sort of thesis in play with Saudi. I think Saudi and the U.S. are obviously amazing allies, and we are looking at the continuation of that partnership. And so our whole goal is to invest at that nexus and continue to support those tailwinds from the perspective where we see Saudi as the strongest, which is industrials. I think it is probably the largest industrial project in the world is Saudi today. Vision 2030, all the other initiatives that the Crown Prince has begun, and yeah.
Wow. And so, I mean, aside from being Saudi and having, obvious ties to the region, I know you mentioned a couple of the reasons, one being Vision 2030, but obviously you consider Saudi to be one of the best markets to be in today, particularly for early stage companies. And I think there's a lot of reasons for that. From them, it's an exciting place to be. There's capital. You can be greenfield here in a way that you can't in mature markets like the US. So what do you see the advantages of that being for these companies?
There's a lot of reasons, I think, especially if you're in the business of hard tech. I think we have a tremendous engineering talents locally. We don't even need to begin with the large conglomerates that have pursued a very excellent training programs. Aramco is the big one, SABIC, so on and so forth. And so I think through those tailwinds, you start to see that there are opportunities for these companies to not only hire locally and support the local economy that way, but actually be able to work with not a very large number of customers, but those individual customers are quite substantial. I think what we realized is if we can identify and support and speak to a lot of these large firms and understand where their bottlenecks lie. For example, one of our theses is around the vanadium market, something I don't think many people have ever heard of. Probably. It is a metal or element that's used to turn iron into high tensile strength steel. It's used in a lot of civil purposes, so bridges, skyscrapers, even in aerospace. It's highly anti-corrosive. The problem is that the supply chain for vanadium is highly linked to Russia and China. By no means other than just geologically coincidental. Turns out 75% of the world's vanadium is based out of 5 steel mills, 5 in Russia, 5 in China. They just happen to be where vanadium concentration in iron ore is large enough to constitute primary mining. And so it's viable for them to add an extra step in the refining process for iron ore to extract this vanadium. And they offset that cost with the revenue that they make from selling vanadium on the open market. The problem is that inevitably makes steel and the demand for steel and supply for vanadium inexorably linked. So what happens is 2018, China dumps cheap steel into the market, price of steel crashes, price of vanadium also crashes, becomes uneconomical. The largest primary mine in the world in South Africa, it's like 11% of world supply, out of business, gone. So what does that have to do with Saudi? Well, we realized, if you can find areas, other parts of the supply chain where vanadium can be found in large quantities, perhaps there's a technology that can be used to extract that vanadium at an economical and high volume manner. Turns out we have a lot of vanadium in fly ash in Saudi. So this is after once you refine sour crude. So this is crude found in Saudi, Venezuela, and Jordan. You end up with a lot of this toxic fly ash that is high in vanadium content. Turns out we came about this route our own way. We realized looking at the battery supply chain, funny enough, vanadium is also a very opportune element that could be used in a novel battery chemistry called the vanadium redox flow battery that could be used for grid scale storage. We'll talk about that later and why that's useful. But in that process, we realized, Saudi has a lot of vanadium. I wonder if we identify a technology in this space that can be used to extract it and stop this volatility. You see these 10x price swings in vanadium. I'll send you a chart later. It's something ridiculous that no one's ever heard of. And it's like a public secret, we call it.
And these price swings are based on geopolitical?
Steel. You have such a concentrated supply, and that is completely tied to a different commodity. There is no listing of this on the London Metals Exchange. The U.S. considers this a critical mineral, one of a handful. They realize that it's something important and of national interest to the country. We're building a ton more skyscrapers here in Saudi. I think the demand for vanadium will only increase, but the supply of it is very, very much limited and bottlenecked. So what we realized is, turns out, a lot of firms here locally are also looking at vanadium recovery. Al Jumeirah has a partnership currently to pursue critical mineral recovery. Vanadium is one of those larger projects that they have. We were speaking to the SIDF, Saudi Industrial Development Fund. They were also aware of this and were interested in reading more. And what we end up doing is we write these long form memos, send them out into the world with a lot of insights that we extract here locally. but send them out to the world's top venture investors, founders, researchers, universities, trying to see does anyone know? It's like a almost like a lighthouse. Does anyone know of a company or a person building the space? And if not, maybe we could incubate that business. Cameron has experience there, and we've gotten very good reception there from that one thesis. Actually, a few of our companies were found this way, and what happens is it makes it highly de-risks our investments. If we make a decision to invest in a business, it isn't just linked to by happenstance met founder A and they've showed us their lovely solution to a problem we were never aware of. We come in prepared into a meeting thinking, hey, even if it's not this exact problem that we're looking to solve, they've got a similar adjacent problem that is equally as large or maybe even larger. We had a conversation with the founder of a large space company, relatively space, who is actually also a USC grad like me. He pointed us to scandium. He says scandium is to aluminum what vanadium is to steel, and it's a much, much bigger problem. And we need this for aluminum with our rockets. If you can find something for this, I will pay you, X amount. It was to that extent where you realize there's just all these issues that no one has ever really cared to look at. I think probably because industrials are very unsexy. Recently, I think they've had a bit of a exciting spur, which is great. But what's more interesting is that, to come back to your question, is by identifying early on opportunities to expand locally, or opportunities to utilize whether it's waste valorization by looking at industrial waste streams here in Saudi that are probably more than anywhere else in the world, will concentrate potentially valuable minerals or metals or other valuable goods just in by happenstance of them in their industrial processes. Perhaps that makes it a very viable location for a plant of some kind, a processing plant or a refining plant, or maybe even finished goods, where I think Saudi could thrive in terms of exports, mirroring countries like South Korea, Malaysia, Poland, which we can talk about in a minute. But I think there's a lot of similarities to those countries in the way that Saudi is pursuing its industrial policies.
Wow.
Definitely jumped around there a little bit.
No, I think this, and I mean, it all goes back to essentially the larger economic diversification at play, of which industrials is quite a large part of it, although, as you said, maybe not quite as sexy as tourism, but definitely follows sort of the same thinking around how do we localize, how do we ensure that we have the labor force for it, and then how do we make sure that this is an international play where we have foreign direct investment and foreign companies who are active and as invested in this as we are. And I think that's particularly challenging in a sense of bringing companies to Saudi with commitment and willing to put in the same investments that Saudi is. Yeah. How do you think about that when when you're bringing your portfolio companies here? What is critical in terms of those partnerships?
It's a combination of two things, actually. I think we'll split the question up in terms of I think there are quite a bit of incentives to starting businesses here, but also introducing foreign corporations to the kingdom. There's I think a lot of ways to go about it. The way that I think a lot of the Asian miracles, as they call it, or even Poland, as I mentioned earlier, and Malaysia, is through the lens of starting special economic zones that can be used to say, hey, these are the benefits we'll provide, tax incentives or some sort of subsidy of some kind if you're able to produce X amount and hit these milestones and come in and move here. I think the Ministry of Investment has an entire list of benefits that they provide.
Program.
Exactly, yeah. If you were to place your headquarters here, or at least commit to investing X amount into the kingdom. Actually, oftentimes in my conversations with people around the world, there's a real issue and misunderstanding where they think the Ministry of Investment exists to invest in them. And oftentimes it's a matter of correcting and saying, no, I think their purpose is to find investment into the kingdom.
This does go back to the larger question of like the investment in Saudi in general is a bit of a black box to people outside the kingdom. They're interested, they want to understand, but there's some sort of disconnect happening there.
100%. It's a shame, I think, that oftentimes when I have conversations with the world's top investors that I look up to, they'll view Saudi as a place where they can extract capital to then send abroad. In this case, I think we're in a unique position where, yes, we have Saudi partners and investors, but actually the majority of our capital, or half of our capital, is not from Saudi. And they have a clear vision and understanding that there is a huge opportunity here. Even if the companies we invest in are not all directly entering Saudi or not Saudi businesses, which we hope to do eventually, the opportunity lies in the fact that our companies are willing to spend their dollars here for the purpose of actually developing production lines locally, with the help of the government, but also larger potential customers. I'll give you an example. Dusur, I know our mutual friend David works there, is a joint venture between PIF, Aramco, and SABIC, and their whole purpose is to actually do this one thing. How do we bring foreign companies to open lines here? Large conglomerates actually abroad. A lot of it has come from Korea and steel, but their purpose is they will, let's build a JV, let's do this locally, let's do this right. But you can't just say, hey, yes, of course, we'll invest in Saudi and go, buy a piece of land and never, touch it. I think that often happened in other economies where oftentimes what happened is they've just increased, real estate prices, and it looks like FDI, but there is no actual, benefit to the local economy, to productivity, to GDP as a whole. I think if your KPI is increased GDP, which I think Saudi, the beautiful part about it is it's very clear in its mandate. It's that all of this is to diversify the economy and increase GDP.
We do have a lot of KPIs.
We do have a lot of KPIs. Oftentimes, I think if you're an economy that relies too heavily on one particular product, I think you mentioned that we talked about the Dutch disease before this. This is a real problem, which I think has been identified early on. I don't think we've experienced that so much here. It definitely has happened in other economies. I think we've done a very good job of diversifying there. But in terms of how do you actually incentivize these companies to enter the kingdom, again, I think it comes down to those main components of providing some form of incentive locally that involves hiring local talent, and that involves showing that the opportunity to be here and export from here is as valuable, if not more valuable, than other neighboring economies. An example of this is Malaysia with the electronics sector. So why usually I think when countries try to bring in or to diversify their economy away from specific, let's say, raw material extraction, what Malaysia did is let's try to not build a Malaysian brand semiconductor firm, but instead provide a lot of talent, a lot of expertise, R&D facilities. It happened over decades. It was not immediate. And attract not just foreign investment, but foreign talent. I think that is something that is highly, highly necessary, which I think Saudi is doing a great job of. KAUST, other research centers and universities. We have so many universities here locally, public and private, that are phenomenal, amazing. And I hope we attract more and more talent abroad. But the reason is you have to create some sort of a hub, a reason for being here. CERN in Switzerland is that. It's for those who don't know, it's a large atomic collaboration with the world's top scientists looking at particle physics. They're trying to understand the world and how it works at an atomic level. It is a marvel. We were there a couple of weeks ago. It's a marvel how many different nationalities and countries come together in one place to build one specific or several different specific projects. I mean, it's mind-blowing. They have the world's largest particle accelerator. They fire these atoms into each other at near the speed of light and smash them together in the middle and try to detect what happened and how does the world work. There's no reason for there not to be a CERN in Saudi. There is no reason. It might not be commercial. Maybe this is more research-driven, but I think they are inexorably linked, again, to use that term. Technology and innovation does not arise in a vacuum. There has to be an ecosystem around it. We're doing a very good job of it now, and I think we'll continue to do better. And so when it comes to the electronics industry in Malaysia, there is no Malaysian brand. What they have is a larger export of integrated circuits in the U.S. 64 billion in Malaysia compared to 40 billion in the U.S. They're a 10th of the population, a 20th of their GDP, of the U.S.'s GDP. Yet they're able to do this. And I think it's because they're able to nurture ahead of time a very strong industrial policy focused on exporting manufactured goods with FDI. So these businesses would come into Malaysia, set up shop, utilize local resources, electronics are useful and advantageous as an export because you have very long supply chains. You can hire a lot of people to do a lot of different things. They're very complicated. They require a lot of education to get done. So you end up training the workforce beyond just simple tasks and actually get them to do larger and larger activities. And they're very easy to transport, and they're very valuable. And so you end up having those three things being quite an attractive opportunity for the government. And I think we've seen that with Alat, the new project by PIF. Honestly, it's incredible what they've done. Their head of supply chain, who I met recently, Mazen Jabri, actually spent 10 years at the Special Economic Zones Authority in Saudi. I'm sure that's not a coincidence. Again, that is a very obvious and clear way to expand productivity in the kingdom. Alat's purpose and mission is to increase local manufacturing, not just for local purposes, but to export them abroad. I think looking at South Korea is a good example. I think most models of the world, comparisons of Saudi with other economies, or comparing it to China or comparing it to other economies as to what we could be. And I think South Korea is a very, very good parallel in the way that you have large industrial conglomerates that are largely dynastic. The chaebols are family businesses. Saudi's, has a very large family business culture over many generations. Eventually, these family businesses are not very interested in operating themselves. They might hire an executive team. The family ends up sitting on the board of some kind, and they continue to develop and expand. And that's how you build a conglomerate, from scratch. It takes generations to do, but eventually it does happen. And I think those are the parallels you want to see. South Korea has enemies near its borders, and so I think they had no choice but to be a large and powerful economy. I think Saudi's in that position too, where they have been a very large and powerful economy and will continue to be so. So hopefully that answered parts of your questions. I know
I think so. So if we're putting together essentially the ingredient list of things you need to be successful in this aspect, it's obviously supportive policy, which we have in Saudi. It's capital, both foreign and local, which again, blessed to have here. And then I think the last one that we're sort of hinting at and talking about is talent in Saudi, which can be a mixed bag. If we're looking at in terms of, I know you mentioned we have great engineers, which is true. This is sort of a field that we thrive in. But if we look at sort of the larger landscape and how ambitious we are in Saudi, do we actually have the talent pool to support everything that we want to do?
I don't think any economy does. I mean, nothing is in a bubble, right? It's definitely the whole idea of this is to collaborate. I think whether it's Saudi or any other economy, we're limited in terms of population. There are goals to expand that.
Yeah.
I think the goals are to get to double in 2 decades or so, or just under that. And if you just look at the comparison between the population of Saudi now, I think around 30 million. It's around the same as Malaysia. Obviously, Korea is a little bit larger. Poland is almost around the same. I'm not sure if it requires it to be wholly Saudi. I think it's actually useful to have some sort of talent exchange between different countries. I think that fosters a very strong ecosystem.
If you look at the successes we've had in the past, those have all been very successful joint ventures with foreign companies in oil, in banking.
Oh, definitely. For sure. Actually, that is a good point. I mean, whether it's HSBC and then OL,
of course,
or the elephant in the room, Aramco, which I think a lot of it could be attributed to how well they have been able to maintain very strong operational excellence, compared to, I think, other national oil companies, where I had a very long conversation with a Aramco engineer around reservoir management, something I had no idea was a thing. Turns out it's a huge thing for Aramco, and other economies or other national oil companies don't really put as much emphasis on this. But there are very important ways in which you have to manage how much you can extract, how much you can, where to extract. These things are linked underground in ways that we don't even know. There are different pressures. And so oftentimes you realize that a lot of these strategies were actually originally American strategies that we inherited and are now probably doing a better job at, compared to, I think, other economies where perhaps due to having a different collaboration with a different country, they did not pursue such a means or such a strategy. But in terms of, to go back to your question, which was around talent collaboration, I think JVs locally are tremendously exciting. I think that is a goal for us at Steel Atlas, is to eventually build the next generation advanced industrials holding company, where we want to JV with local companies as well as companies abroad, hiring both sides of the table, but to be based here. It is the location is perfect. I mean, we're right by two very strong supply chains. We're right next to the Suez Canal, and obviously very nearby Africa, close enough between Europe and Asia. There are other examples of other economies nearby us that have very strong export potential, and there's no reason for that to not continue to happen with the right ingredients, as you said.
Right, and then of course eventually the goal with this, and I know this is something you also wanted to discuss, is to go from being an importer of a lot of these goods to being an exporter. So how do you see that journey panning out?
I think, as I've mentioned, it's going to take a lot of, and already has been taking a lot of public support. I think we saw a lot of recent announcements that are linked towards that. BlackRock with this $5 billion investment with the PIF to start, BlackRock Riyadh Investment Management, BRIM. That will obviously create a lot more sophistication in just even the Saudi capital markets. I'll answer your question in a moment, but an interesting fact that I didn't know until recently is the amount of retail investors locally in Saudi as compared to the US. It's around 60% on Tadawul as compared to the US of 20%. It's a huge difference. I think it's still a bit more than 60%.
The family group franchises.
I'm not sure what it is, but I think it's a very strong culture here in which we in terms of volume. I'm sure if you look at in terms of actual holdings, you definitely don't see that more of the families are owning more of these public assets. It's more or retail, investors that are holding most of these public assets. It's probably going to be more institutional investors, but regardless, the way that I see it is it requires quite a bit of import of technology and talent, a combination of those two things, but also commitment from other governments to want to collaborate with us. And I think this is what we've done a very good job at, is making sure that we have more friends than enemies, is making sure that we collaborate with different countries and cultures. The amount of conferences we've had in a year has been mind-boggling. We were recently at the World Economic Forum here, and even at the FII in October, it was crazy to me how much of a commitment other economies have towards building ties with Saudi. India and Saudi recently connected their countries with an undersea cable to share electricity, renewable power. We can get into that as a whole other conversation.
India and Saudi, I think, is such a fascinating relationship.
India and Saudi?
Such potential there, so I think
100%. 100%. India also a very large economy, different obviously in terms of GDP per capita.
Yeah.
Saudi is a lot closer to probably, I think actually almost identical to Korea in terms of GDP per capita, if my numbers are correct. Whereas for India, it's definitely not the same. Right. But they have just such a large population. The market there locally is gigantic.
Yes.
It's crazy.
It would be tough to have a GDP per capita to rival Saudis when you compare population sizes.
100%. Yeah, 100%. But yeah, you're right. India is fascinating, and the relationship I think will continue to grow. So with the Saudi in the US, and then Saudi and Europe hopefully as well.
And Southeast Asia in general, I think a great market to tap into.
Oh, definitely. I think the partnership with Saudi and Korea has really blossomed. I seem to have a bias here today for some reason with Korea. I mean, it was on my mind. I think because of all the conversations that I've been having recently because I think LG and Samsung are looking at building more here. Hyundai in terms of automotive, it's very interesting. I think Lucid Motors will be using Saudi steel or Saudi metal in their components here, which is great. More of that. I think the mining sector in Saudi is absolutely gigantic and will continue to bloom. The potential is just there. I've spoken to many people in this sector, and we're looking actually quite deeply at finding novel ways to extract metals from ores in more economical ways, with increased selectivity and so on, that does not impact the environment too negatively. At the same time, I think when you look at all these industrial processes, the most interesting aspect to it, I think we're jumping and skipping the main, I think, point of this is what oftentimes the conversations I have is but a lot of these things are quite terrible for the environment. I mean, isn't it? And so I oftentimes have to have a conversation and say, look, I don't disagree with you, but these things are a necessity. Oftentimes they're highly energy intensive, and renewables will not be the solution to large industrial processes. You cannot power an entire country purely on solar panels.
Yes.
I think Germany.
I think people misunderstand Vision 2030 also when they're like, oh, so Saudi's moving away from oil, and it's never we're never going to be done with oil.
Oh my God, no, never. I mean, people think like oil just equals energy as well, which is not the case.
Yes.
And also there are other fossil fuels that also have different purposes and means, but the byproducts of petrochemicals is a whole universe in of itself. SABIC exists largely in the beginning because of that. That was its by royal decree actually. But yeah, you're right. I think what we really should be looking at is diversifying the economy away from oil while still understanding that it is necessary and it will never go away completely.
Yeah.
It'll never go away completely. But we need to find an opportunity to also reduce the amount of oil we are consuming locally. What do I mean by that? Saudi extracts oil at around, I don't know, $3 a barrel, something along those lines. Whereas I think with the US, it's something more along the lines of just above 20. Today, I don't know, the price of oil, maybe 80. When we are locally utilizing energy, we're obviously not selling it at that $80 mark.
Yeah.
And so what ends up happening is our capacity is being utilized for local purposes, when in reality, it's one of our largest assets is being able to export this oil, both for a profit, but also for geopolitical purposes. If one of our allies says, "Hey, we're going to sanction this country, they are a large oil producer, and we need you on 30-day notice. We need you to extract the amount of oil that would have that they would have had covered." And so oftentimes that means that we have to make sure that we have enough reservoirs, enough capacity, enough reserves, barrels to do so. Obviously, we have hundreds of billions of barrels. But when you're talking about such large countries that we're dealing with, it's quite necessary. So what happens there is that you end up in a situation with industrial processes like desalination that is highly energy intensive. We are 20% of the world's desalinated water is from Saudi. The largest desalination plant in the world is in Saudi. This is almost all powered by oil and gas.
Right.
And
because
natural
desalination is still terribly inefficient.
Terribly inefficient, but it's highly necessary for Saudi. I mean, at one point in time, I remember that water was more expensive than oil.
Yeah.
It's crazy, but it's necessary. We have to find means to do this. Whether it's renewable desalination, I don't know. I don't believe so. I think electrifying an entire economy, let alone the world, is a huge process. Electrifying a commercial plane, I don't think will ever happen. I don't think you can have a battery powered, 737.
Probably not a plane I would get on, but
I would not get on that one either. But the more likely solution is probably other fuels that are transportable in similar means in terms of pipelines, like hydrogen and so on, which obviously Saudi has done a very good job of pursuing that technology with NEOM and Air Products, and so other means in which we can look at, or other economies that we can look at as an example as to what happens if you decide, let's just focus our entire economy towards renewables. This is Germany's the best example of this.
Yeah.
I think in 2000, they had a policy to fully focus on renewables. By 2022, they were the poster child of what renewables could look like. Problem is, February 2022, Russia invades Ukraine. Turns out Gazprom is their largest supplier of natural gas that was powering the rest of their industrial activities. They never recovered to pre-industrial production, pre-COVID levels of industrial production.
Wow.
And especially not after that. So they were picking up. And that happened, and it completely wiped the ability for these businesses to produce with reliable baseload power. There was no reliable baseload. Energy prices 10x'd overnight. It was crazy. It does not make sense to fully go renewable. I think there's a good in between where some portions of it is focused on renewable. It's amazing the price of power that comes from solar. We've done an amazing job, largely due to just years and years and years of iterating. But when it comes to a process like desalination, it just can't happen. The reason is that batteries are very, very heavy.
Right.
Electricity usually has to be used on the spot, or if you want to store it, you'd have to pick up this battery and move it somewhere else. It's quite heavy. Oil already comes, or fossil fuels already come in a package form that can be transferred quite easily. I pick up the barrel, move it elsewhere. I have a pipeline, send it over. And if I want to use it, light it up, and it's done. Batteries, different process. I have to now electrify my entire infrastructure. This is I think people have to really be more pragmatic in terms of the steps we have to take to get there. It won't happen overnight. I think it's better for it to happen, but it should take time. And it's better, I think, to produce more electricity through other more interesting means, or more realistic means for large processes. I don't mean to power your home. I think solar is actually perfect. That's great. I think Saudi's doing a great job pursuing that as well. NEOM is really pursuing renewables across the board, and I don't think we should avoid that. But I still think there's a lot to be said about looking at those comparisons of different economies that focus on.
And there is the intention in Saudi, obviously, especially because we're starting so many things from the ground up, to be able to utilize the latest technologies, to be able to really keep renewable energy in mind as we build, whether this is NEOM or even in the new houses they're 100%. Building in Riyadh.
And I even think actually the reason why Saudi is so good for this is that oftentimes what stops the most novel technologies from being adopted is that along their risk curve, over time, they in the beginning you start with early stage venture equity financing. Even before that, you start with grants, maybe some lab research. Eventually, you get to venture financing, where okay, let's try to commercialize this. You go from lab scale to pilot to eventually commercial scale. The problem is once you want to get to commercial scale, you want to start your first proper commercial plant, your first of a kind. That's what they call it, the N of one. There is a huge gap in the financing of those things. It's a little bit too late or too dilutive to raise equity. At that point, early stage investors will say, no, I'm not diluting myself to go for another, let's say, sometimes you're talking about billions of dollars in terms of a fundraise. It can't be just purely equity. Usually it's a mixture of equity and debt. Problem is, and for, let's say it's a specific project. You have a holding company that has, a specific technology, an IP they want to utilize in a plant. Let's say they're, using some novel vanadium recovery techniques in Saudi to turn fly ash into useful vanadium pentoxide. But it's the first of its kind. I can guarantee you it would take many months, years to do so in most Western economies. It is just extremely difficult for you to convince a bank to give you to underwrite the risk taken for the N of one, because there is no precedent. It is the first of its kind. We don't know. Oftentimes the metrics that you have to look at are non-existent. There are no financials that we can look at. There are no significant offtake agreements. Insurance providers have not come in and said X, Y, and Z about this particular technology. And so what I've seen is that the thing that makes Saudi so interesting is that we're able to utilize a very, I'd say, in a good way, a top-down economy or government to be able to make things happen quite quickly. The example with NEOM and Air Products, although I don't think that was the first of a kind, is still remarkable. We're able to make large decisions very quickly because we know what the mandates are. They've been given to us. It's very easy. We know what the government wants. So if you can pursue technologies that say, hey, there is a high likelihood that this thing can solve these problems quite well, will you be willing to finance it? And I think Saudi is one of those places that I think when there is a will, there is a way, and they will make it happen. Whereas I think in the US, we're marred by a lot more regulatory hurdles. Same with Europe, even more so. Even with the IRA in the US, which is the whole point of that is how do we avoid bottlenecking our supply chain for batteries with China. So China has a huge monopoly. I don't know if this is known to the majority of Saudis, but we have a very, very large problem, which is almost the entire battery supply chain, from the cathode, which is lithium, the anode, which is usually graphite, even the rare earth elements that go into the batteries are almost completely monopolized by China. Not necessarily the mining of it, although rare earths, yes, but the actual production. They spent many years ahead of anyone else building this out. Even actually, a lot of the solar technology is originally a Chinese effort. But the lithium-ion battery was invented in the U.S. in UT Austin at the Dr. Goodenough lab, but it was not kept there. Commercialized eventually into China, and ultimately they developed the means to do this at scale.
Because he couldn't find backing in the U.S.
A multitude of reasons. It was more through acquisitions. We didn't have backstops in place to stop such a important technology from being taken about. And I think it's very difficult to just if someone makes a discovery. Oftentimes we realize is if someone makes a large discovery of some kind of technology discovery, it's rare that they're the ones who actually accrue or capture that value. It's usually the fifth or sixth person. Tesla was not the first electric car company. It was not the first battery company, but they did it enough times to get it right. And it's something we have to battle with actually oftentimes at Steel Atlas. Should we, looking at the company that's just invented the thing, is it often the scientist that invents the thing that should be commercializing that thing? I don't know. It's the examples of which are shaky. But I think there's a lot of opportunity for it to be done right and be done well. And I think Saudi is also one of those places for that. I recommend anyone to visit CAXT in Saudi, the Center for Science and Technology here in Riyadh. They have incredible scientists with incredible IP, unique IP to Saudi. Oftentimes it's linked to petrochemicals, but most times it's not actually. It's a wide variety of scientists that are very passionate and very well educated abroad or educated locally, that have come back. There's a mass exodus from abroad back into Saudi, of Saudis and non-Saudis. A lot of my friends have now come back, and they're quite young. We're a young population, and they're building and working towards the strongest projects here, whether it's with the government or in the private sector, and it's inspiring. I'm saying this while also speaking to an example of that.
There is that undeniable energy for foreigners and for locals coming back. Of we're creating real change here. Yeah, it's quite exciting to be a part of.
Definitely.
And I think for you especially, as a Saudi who's now working between the two, where hopefully Steel Atlas is relatively new for you guys. You're already making great progress. What do you see your future being in 5-10 years as it links to Saudi?
It's a very good question. I think it'll be most likely a combination of two things, which is still investing in the top companies globally, whether it's Saudi or abroad. The top technology companies at the early stage. This is seed to Series A. Identifying where those companies fit best in different geographies, whether it's in the GCC, Saudi, or even Europe, where we have a bit of a presence as well, and trying to help them commercialize within those economies and with those countries. And I think that we have several case studies where we've done this remarkably well. Several case studies I think that show that if you are even if you are a small team, a novel company, investment firm, a novel team, I think the two things you do well is you do what you say, which is exactly what we're doing here in Saudi, and just be good people. I think that usually does get you through most relationships and situations. And in terms of what we're planning to do here, it's really focused on how do we build the next generation of industrials with partnerships locally and abroad. Mm-hmm. I think a lot of the successful businesses that have had begun in Saudi many years ago, generations ago, were all franchises, JVs with companies abroad. There was a law that you had to go through Wikala. That has now it doesn't exist anymore. But you still see that for the hardest businesses, not necessarily software businesses, but for the most difficult businesses, hard tech businesses, hardware businesses, it is still far, far, far more economical, advantageous to work with a local partner. For many reasons. And I think actually we had a conversation with Alat about this. There is a reason why Alat exists. There's a reason why we have a gigantic factory being built here to manufacture the world's most difficult products. It's not that because we have all this IP that we know we can do it locally. It's that I think firms see the utility of being in Saudi, but perhaps it doesn't make sense right away to put all that capex up front to build a factory. We're giving them the keys to the door right here. Like, here you go. And I think that is what we want to build here at Steel Atlas as well. Is a very similar version to what Alat is, in partnership with Alat, hopefully at some point, and towards not just manufacturing, but towards energy, towards construction, towards supply chain logistics, and towards advanced manufacturing more broadly. I'm really happy that you brought me on board.
I'm so happy to have you here. This is really sort of a full circle moment because you're one of the people I told, when this was just very, very early on, and to be able to sit here and have this conversation today is super exciting.
Yeah,
so
yeah.
Thanks for being here.
Likewise. Thank you so much.